Thank you, Angel, and welcome aboard. It is another Monday, another manic Monday. Maybe not. We'll see. How was your weekend? Mine was okay. Nothing special. Got a little bit of work done around the place, and did we go? Yeah, we had a beer on Friday night. That was good. Hope you enjoyed yourselves and survived the week of trading last week. Very, very quiet week for me last week. Very few entries. Did I have any entries? Only on this pound breakout trade, I think. So let's set this up for the week and see how we go. We've got a range of current bar and previous bar at the moment. Last three 1 hour candles of pre-London session are the ones that we use as our breakout area or our range. And today, currently, the range to the high side is the high of this bar, and the range to the low side is the low of this bar. So we can set the short up, no problem. We'll be trading this the way I trade rather than the optimized version, which got a few winners last week, and I think we only had break evens on my version, which was thank you, Lewis. Yeah, had a good weekend. Hi, Swee. Yeah, we got some catching up to do. Let's see if we can kick a few goals this week. All right, entry level for the short is 1.3894. And the stop loss for the short will be 1.3919. 3894, 3919. See if we can remember that. What's happening here? Sorry, I can't get my what's he up, guys? There we go. Now this is going to make me forget, isn't it? 3889, I think it was. I'll check that. And 3914, I think. Let me just check that. So the short, no, not even close. 3894, 3919. Okay. I had the 3 digits of 4 right, but not the last one, which is all important, of course. All right, so there is your order for the short. We can probably place that. Let's do that. Once again, those of you here for the first time, welcome to you first of all, but of course I'll explain this trade very shortly. And we are trading this at very, very small stake because it is not yet a proven strategy or system. So what is known in the industry as beta test mode. 3894, so I remember this time, was the entry, and 3919, I believe, is the stop loss. That's for the short. Okay, well, the stop loss looks right, and 3884. I went 3894. Memory like a sieve, I'm telling you. Let's change that. 3884, not 3894. Okay. Sorted for the long. And that's the entry below that bar, which is the low of the range, stop loss above that bar. The long entry will be at 1.3932, and the stop loss will be 1.3910. Surely I can remember that. 32 and 10. Can I back myself? By George, I think I've got it. Okay, so let's put the buy in the market. Micro lots, guys, don't forget. 3932 and 1.3910. Bingo. All right, so the trades are on. Now, if I was trading this myself, I would be looking short here, I think. Yes, I wouldn't mind trading underneath that. That'd be fine. TP1 there, or there-ish. Nice little tweezer bottom on the weekly pivot on Friday there. Drove the market up a little bit. There's probably a case for break, bounce, go to the high side. So I can probably make a case for both here. And we do have, of course, if they do break out, we've got them both covered. Those of you here for the first time, this is clearly and simply a breakout of the range prior to London Open. The range that I'm using is the last 3 candles on a 1-hour chart. And I'm simply putting my entry above the high of the range to the nearest pip, the highest pip, and my stop loss underneath that bar. And the short, which is not, pardon me, the alternate breakout area, the entry is just below the low, rounded down to the nearest pip, and the stop loss is above that candle. So once we get triggered here, we will cancel the alternate order. So it's genuine one cancels other trade. So if the long gets triggered, we cancel the short and vice versa. Our take profit, we do 2 take profits on this, and then we trail if we get a nice breakout. The first take profit is half of the risk that we take in terms of pips. So there's 22 pips at risk here. We will therefore halve that and go 11 pips, and that becomes our first take profit area. So we go 11 above the entry. So that would be 1.3943. And the TP2 is double the risk, which in this case will be 44 pips. And that will bring us to 1.3976. At TP1, we bank half of the money and move our stops the same amount of TP1 from entry. So in other words, if we're taking 11 pips of profit here, we'll move our stop loss 11 pips from entry, underneath entry. So therefore, if price comes back on us, the worst thing that can happen is we get a break-even trade. TP2, we got a choice here, really. You can take another half of the half off, or you can simply move your stops to entry. Either way is fine by me, and we'll use the take half of the half off and trail our stops then on a 1-hour chart to buyer bars. So in other words, if we do get a breakout such as this, we would take our first profit, let's say here, our second profit, let's say here, and then we would trail our stops 2 buyer bars. So 2 buyer bars in a row. As soon as we've taken TP2, we move our stops underneath the first of the 2 buyer bars. If we get another 2 buyer bars in a row, not there, so we can't move it. 1 there, so we can move it up to there. And we got another 2 in a row here, so we move it up to there. We got another 2 in a row here, so we move it up to there. And that was it. We would have got stopped out. So you got most of that if you managed to get that on Thursday. I think we got a break-even trade again on Thursday, didn't we, from memory? Anyway, that's the way she works, guys, and I will keep you posted on that as time goes by. I don't have any new trades in the market. Last week, we were looking to trade euro-pound long. It hasn't really got on fire. It did have a little bit of a rally, but it's pulled back there today, as you can see. Friday was a little bit of a rally. We were waiting for that. Didn't happen all week. I didn't place an order. What else are we looking for? Kiwi Yen, we're looking to play that short as a false break. And a what? We got a doji bar instead of a bull bar. So no order there again. Although we did place an order at some stage. When was that? A long. When did we place the long? Buggered if I know. Can't remember. Memory like, well, sometimes I remind the elephants, Ash, as I said before, but today it's not just working, or it's just not working. Gee whiz, it must be Monday. How you going, mate?
Yeah, good, mate. Good. I've actually got a trade that I can
Have you?
offer everybody. Yeah.
Happy days.
Uh, it's in either gold or silver, but I think they're both valid. Let me just take this on here. I'm in a little bit earlier, but actually this is a really nice setup here. You see the nice bar here, but if we analyze this is silver, but actually gold is good too. Gold's if you think you might have missed silver, gold is still relevant. So pushing to the upside. I'll just take these lines off because I don't need to see where I got in, but it is this is a relevant setup here. Here and now, and I think it's valid. And the thing with this is that you could enter this, anywhere in this area, put your stops at the lows if you really wanted, and get a really nice risk to reward ratio. And I think it's the same with silver. You enter anywhere in this area and put your risk at the low, and you got a really nice. I mean, okay, it's starting to push a little bit high now, but you've still got a decent charge there. But that was the real. That was a real bar, and you could even put a limit order in here if you wanted at 25.94, with a stop at the low of this area down here at around about 25.82, which would still give you a 2-to-1. If that pushes to the highs, that's going to give you a 2-to-1 trade. And let's have a look at it in a bit of detail, because what we've got on silver to start with is this is the area that I'm looking at here. But if we just start to edge out a little bit, what we have here is a trend line coming from the lows, and kind of on top of this level. And okay, that looks a little bit dangerous there, but we may get away with just pushing this down a little bit. It depends where this which trend line you start to use. But if you use this one here, which may well be the valid one, because that's really the start of the trend to the upside in many respects. But it depends which trend line you use. So that does look a little bit dangerous. But as I say, I think you could look for a 2-to-1. You could put in reduced risk and still be in pretty good shape. And you can see how it's reacted here. And look at how these hammers, look at what these hammers tend to do to silver. Whoops. They're really good signals. Look, another one here. This isn't a hammer because the low isn't at the lowest point of the price action, but it's still a bar of the same kind of anatomy. Same one here again. So these bars do tend to be pretty good setup bars. Now, if we look at this on the 4-hourly, this is where it starts to get a bit more interesting to my mind as well. Where are we at here? Good morning, Lewis. Roy, yes. Well, silver's more volatile, so yeah, from a trader's perspective, I think it's a better instrument to trade than gold. So yeah, I would agree with that.
Cake, that silver.
But yeah, it is better to trade. You're much more likely to get an answer if you sort of like trade silver. But look what we have here. Lovely little inverted head and shoulders going on here as well, and you can see that would give us a neckline along this area here. So the suggestion straight away is it goes to its neckline. Now you saw that my trade was in a bit lower because I was trading the right shoulder. I was trading at the bottom of the right shoulder. But actually, this is a nicer setup in many respects, and you're effectively aiming to get at least up to here, and then see if we can get through. And then on the retest, you could even maybe take it again. So how you manage the trade really is it will give you multiple options. So then we go down to the hourly. And we see another little inverted head and shoulders on the hourly. So there's quite a few messages here. Now we'll have to have a look at a couple of other things before we conclude. All the kind of the potential permutations, maybe not all, but I can't cover them all because I don't know them all. But for what I have, and again, that's your kind of risk to reward ratio to start with there. Yeah, no worries. We'll have a look at that. We'll have a look at the COT data. We'll have a look at the seasonality on gold and silver as well. And I can tell you, that the gold is certainly due to have a bounce in this particular period, which I'm going to show you now. But just finally, you know, we go down to the 15 to see what kind of setup we have. Lovely little bar there. You know, it does look like it's carving out a low here. Now, I don't know whether it's going higher. All I'm saying is that this is a really nice setup. And then finally, this is where Jeff is all of a sudden going to get excited. Look at these pivots. So we've gone right above it. We've come back to the daily pivot and we're bouncing away. And if you don't like the daily pivot as support, then you got the weekly pivot. So putting your stop under the weekly pivot area, probably at 25.80 actually, looks like a decent place. Now, if it gets through there, then I would suggest we're probably wrong. You know, that's probably a decent enough one. It may get hold up on this 26. Sorry, the 25.77, and that is the only thing with the volatility of silver, is that it could come down to this point and then all of a sudden bounce off here because it is such a volatile one, and then create some sort of you know, bar there, which kind of gets us in. So that's why you want to make sure that you control it correctly, rather than kind of maybe it's not wise to take it as a normal scenario and situation. You know, what you could maybe do to trade this a little bit safer is to get in somewhere around about here with a stop down here, and then see if it does turn here to add the rest of your position on. And if you don't get that position on, then at least you're in a trade to the upside potentially. So there are a few different ways to play it. Mine would be to try and give a nice wide stop so you don't get popped out of these ones, because you know, they do tend to pop you out. Gold the same, you know, nicely above the pivots. Okay, it hasn't come down and tested the daily pivot, which might be you know, the one question, and that might be enough to suggest that maybe silver's going to make another pop down before popping up. So it could be a timing thing, and we need to understand these permutations when we're looking to take a trade. What are the negatives? And I think we've just seen, you know, that there could be a negative here when we look at the fact that silver hasn't yet, well, it tested it here, so it might do, but what might happen is it might come there first. So that is a possible permutation. It depends how you trade it, Roy. So we can get into that a little bit. We'll talk about that in one moment. Now, what was I going to do? What was I going to say here? That's the thing down there with silver. Hold on, let me see. Oh, I'll tell you what. Yeah, let's have a look at cotton seasonality first, and I'll get back to that point. So really, the point that Roy's making is, you know, could this be something that we hold on to for a 3 to 1 plus, or is this something that we are looking to maybe make a 1 to 1? And it really does. It's not going to be. It's something that you could hold on to. If you're asking me how I'm playing it, then yes, I am trading it for a bit more of a long-term sweeping move. And what I'm looking to do is really start to look at the broader pattern with both gold and silver, where I'd be really looking for a move back up into this high here. So rather than just looking for, you know, on this 4 hour that this is the inverted head and shoulders, I'll be looking for us to get right back up to this high here around about the 27 level, rather than just looking for the neckline. I pointed out the neckline earlier. Rather than just that, I'm looking to get back up there. So yes, you know, in many respects, you could trade it in a few different ways, but any setup that we take, and I understand what you mean, that the real point you're making is that it looks like a bottom rather than part of a trend which is already in motion. Because if you're trading 1 to 1, if you're trading 1.5 to 1, 2 to 1, or maybe even 0.7 to 1, you're okay with trading a trend which is much much further up, much more mature. But when you're looking for those big, 3-to-1 moves, you need to get something nearer the low, nearer where a trend is starting to be created. Sorry, a turning point, I should say, is trying to be created. So yes, from that perspective, you're absolutely right. It does look like a potential turning point because there's a chance it goes through this level and keeps going. And we'll talk about why that could be the case. I'll tell you what I was going to mention was the dollar. So this is the other thing that we have to be aware of, what's happening with the dollar, because obviously we're trading silver versus the dollar and gold versus the dollar effectively. So what's happening with the dollar? Well, things are starting to move positively. You can see, last week's bar looks a little bit negative, but things are starting to move a little bit more positively when it comes down to the data in the States. And now we've had this stimulus package. And we've got the Fed out on Wednesday, and it suggests really that the price action right up until Wednesday is going to be something that we can't really pay too much attention to when we're looking for something that could be long, much longer in sweeping, because we don't know what Jerome Powell is going to say, and this bond yield situation is concerning. So let's talk about all the potential permutations of what could. What else could be looked for a message of what's going to happen with gold and silver. So first, the COT data and the seasonality. Let's quickly check that. Here we go. Just going to get in here. So firstly, gold. And when we look at the COT data with gold, what we have is an index which is pushing higher. So this isn't really a huge buy signal. These are the buy signals here, and this is where we'd want to be. As you say, like holding on to a longer term position. When we see this, we haven't really got to that point yet. But we have seen quite a significant tick up from this bottoming point here. So that's quite interesting. And then when we look here, we're seeing the selling pressure coming off a little bit, and just a little bit of tick up in gold. So this looks more to do with the sellers moving out the way, which is making the index pop up, rather than there being a big surge for the buyers. So the sellers are just easing back on their positions, and the buyers, they're not really committing. So that's one sort of aspect of it. Do we have really a really bullish sign with gold? No, we don't. But we do have a little message that it could be the right time to take a punt on it. Now we look down here on the seasonality, and we see there's a little bottom made sometime in March, around about the second week in March, moving into the latter end of the week. But then it pops up and pops back down for around about April, before we maybe see the end of March, start of April as the low end of the curve for the low end of the trend, for gold to then start moving higher. So we may still be a little bit early, which suggests that possible volatility, could be in play here, which also suggests taking a smaller position. Then we look at silver. Silver again, we are seeing that index just pop to the upside here, and it's the sellers coming off rather than the buyers coming in that is providing positivity for the index. But look at that. That's a buy signal and a really good shoot to the upside. That's a buy signal, and eventually that was the bottom really of looks like the year in the end. That was the bottom of that year. Another buy signal here, which didn't come to fruition. A decent buy signal there, and a decent buy signal here. So we don't really have the buy signal, the big buy signal yet with either gold or silver, but it could be a little bit of a message that we may be getting started, because by the time that buy signal comes in, the chart may have moved a little bit further. And again, silver's a bit better. The bottom in silver does look like it comes around about the second week in March, before we start to move to the upside and maybe make another low down around about July time. So the seasonality, the seasonal aspect looks better for both gold and silver. Now let's look at the Treasury bonds. Now I'm really interested in the 10-year more than anything else, and look what's going on with the 10-year. So the COT data for the 10-year. Firstly, the sell-off in the 10-year is pushing those yields higher. Now we don't really want to see the yields going higher if we're trying to trade gold and silver. But the more this sells off, the more likely we're starting to see those yields continue to push higher, which isn't great. But it looks to me like we might be just very near a potential support level here. So could be that we get a push to the upside in bonds and pushing those yields lower. Bit of buying coming in with those bonds as well, which is a good sign, and the sellers are coming off a little bit. So the COT data is suggesting that that gold and silver also decent for a short-term move at least. That's the way I'm reading this right now. So let's see what we get. Let's see what we end up with out of that. And the right shoulder is formed today. You're absolutely right, Lewis. Jeff, there's a potential ABC buy trade on the Kiwi Yen on the 4-hour.
Kiwi Yen. I was looking at that last week, wasn't I? Let me see. 4-hour buy signal ABC. Yeah. Let me just give you one reason only why I wouldn't want to take it. Yeah. I'm just having a look at the ATR, guys. Do you want me to take a screen, mate, or?
Oh, if you got some deeper analysis to do, if not, no big deal.
Yeah, I better have a good look at it, and I'll come straight back to you.
Okay.
We have been triggered long on the pound and are out of the money at the moment. Kiwi Yen, however, we were looking to trade this short last week, if you recall, but we actually got into a buy, which was a break-even trade. I remembered it now. Now, here's the thing with what we're seeing at the moment. Let's get rid of that channel for the moment. Well, sorry, that trade line for the moment. What I see here is price has opened with a flurry this morning, without question. And it's presented us with just about the biggest buying bar since here, maybe. So some time back. The ABC that referring to looks pretty good, and it could be that one, or it could be that one, take your pick. Either way, that one probably looks a little bit more to the point at the moment. Let's get rid of that one. We need to find where we are in terms of the bigger picture. And this level here has been a lot of support, a little bit of a mess through there, resistance, and we're there again. We pulled back off it last month, and we pulled back off it with that big bar there. We've had 1, 2, 3 buying bars, currently 3 buying bars. 1, 2, 3, 4, 5, 6, 7, 8. This is the 9th buying bar in a row. Now, I tend to have a look at the charts and think, well, how long since that's happened? 2, 4, 6, 7, 2, Dad. Anyway, that's the exercise that I would go through to actually see if this is worthy. I would then look at the ATR, and the ATR suggests to me what is acceptable to take as a trade, or otherwise. Sorry, that's the weekly I'm on. I need to be on a daily chart to get that. So again, insert indicators, average true range, go back 20 days, that'll do, that's a month. And it's telling me that the ATR is 81 pips. So when I have a look at how far we've traveled today, we go, let's go back to the 4-hour chart. We go from here to here, and I think I measured 60 something, didn't I? Oh, 73. So we've already traveled most of the average true range of this currency pair for the last 1 month. And you can see why. You know, the candles are reasonably small, and it's up and down like father's pants, as I always say. And really, there's no breakout here. A little bit there, but really, we've been in a range of less than 80 pips, and that's what we're being told. So is today the day that changes? Could be. Don't know. But is that the day that I want to trade it? with that supposition when we've got a clear resistance level dead ahead now. So if we were to trade that, of course, this doesn't mean it won't go there. If we chose to trade that now and get into the market long here, where you're going to put your stop underneath that bar, fair enough. I get that. That's the ABC. You could put it underneath the daily pivot. You could put it underneath the weekly pivot to be a little bit safer. But I don't see a real reward here at the moment. And then you bang into this level here. I really don't see that as a strong buy right now. Not saying it can't go. Of course it can. What I would prefer to see is price pull back and retest the daily pivot or even the weekly pivot. Give us a higher low based on this breakout, right? So we have a breakout, retest, hit the highs again, give me a higher low, and then I'm okay to go. But I wouldn't be trading this, and not for 1 second am I saying it can't go, but the numbers are not telling me it's a good trade to take at this point. So that is Kiwi Yen.
Yeah, I think that's good, mate. I think that's yeah, that's good analysis. So you'd really want to take that above the high of those two bars, right?
I'd have to enter there. Yes, that's the ABC, and it's just too dangerous.
Yeah.
I do like the fact that it's a new high. I do like the fact that we've bounced off the top of the range, but I want to see that higher low first.
Yeah.
And I want to enter down here. I don't want to enter here.
Yeah. Yeah. Yeah.
And I better get rid of that. So there you go, mate. Back to you.
Yeah, do you know the other one that I think is of interest at the minute is the euro, and that is because we had a few elections this weekend, and Angela Merkel's party got pretty badly battered. You know, they got bashed around a little bit, and I think that that is going to put pressure on the euro. And I don't know if anybody listened to the ECB press conference last week, but it was very negative. I mean, there are quite a few concerns out there. I mean, we're seeing the euro dollar push to the upside currently, but I wonder whether the euro might be a kind of sell the rip kind of scenario. Now, I wouldn't want to get in down here. It looks a little bit low to try and take this trade. I think there could be a few areas that need a retest. This would be, so far from what I can see here, this would be the best one. Yeah, looks like that area is pretty good. So 50% retracement around about the 1.2043. Looks like the area to try and get short on the euro, and it does depend on how we feel about the dollar. if we're kind of trying to compare the euro, and I honestly think that the euro is in a pretty bad spot. I think that what Christine Lagarde was saying last week was effectively they will do everything that they're still there, prepared to do everything that's absolutely necessary to try and relieve the problems that were left by the pandemic. But they may have to move before they don't want to have to move. Now there is something that I'm still trying to unscramble. That we'll find out maybe from Jerome Powell on Friday, but because it's been a year since the pandemic, a lot of the stimulus packages, a lot of the bond buying packages that were put in place are about to expire, I think, pretty soon, and it seemed like a non-event to a main event. Now, I don't fully understand it as yet because it's something that I've only really just become aware of, and I don't understand the permutations, and I don't understand the potential risk for the market, and I need to find out about that, and I can probably tell you more about that tomorrow when I research it a bit. But it seems like that there could be a little bit of a danger. Really sort of up ahead, and these are some of the headwinds that the likes of the European Union are really struggling with. And then we kind of add on, we have to paint over the top of that the fact that we've got a vaccine rollout which just isn't at the same pace as certainly the UK, and I suspect probably not the US either. So the Euro bloc as an area is a bit slower to the uptake than some of the other major economies. Then we got this vote that happened, and Angela Merkel, correct me if I'm wrong, mate, but I think she's due to step down in September. Now, if
is it September? I'm not sure, mate, to be honest.
I'm pretty sure it's this year, isn't it?
It is this year, I believe, yes, but I'm not sure it's September. I don't know.
Now that's pretty big. That's a massive development for the CDU, and it's a big development for Germany. And we know that with Germany being the most important player, really, when it comes down to kind of like pushing the euro in its price, and making sure that the European Union as a bloc is able to survive. It's a significant factor. Now, I don't really know. I'm not fully aware of some of these challenges. When it comes down to the other parties, I'm not that educated on German politics, but I do know that Angela Merkel and the CDU have been very, very good for Germany. It's been really good for the German economy. I don't think that the handling of the pandemic has been perceived to be handled very well at all. And even though I think it was the same for the UK, the timing for them has been a lot better in many respects, because there was an election that had just happened. So now we kind of like hit this this kind of different period, and I still think people have got short memories. And by the time it comes down to the elections, I think that this will all be, on the whole, I think it will probably be forgotten about, or certainly diluted. And Boris Johnson and his government seem to be making the new decisions in much swifter, much faster than they were before. And we do have a very, very strong vaccine rollout. And as long as we're not seeing too many adverse effects from the vaccine, which incidentally, again, has been banned. The AstraZeneca one's been banned from, I think, Holland as well now.
Yeah.
Because of health concerns. I mean, there's this blood clotting concern, which AstraZeneca say that they've done the tests and they don't see a correlation. And also, this is kind of normal. The kind of side effects that you'll see for some people is quite a normal basket of people that are getting these side effects. So whether that's significant in the end, we don't know. But there are other vaccines kind of coming out, and maybe the UK ends up going a bit early. Maybe they've just been so keen to get it done, they chose the AstraZeneca one, and there are these awful side effects from a larger number of people. We just don't know yet. But the UK is still moving. It's moving forward. The EU is not moving forward with this stuff at a fast enough pace. Then you've got the fact that the CDU is under pressure, and you've got the fact that Angela Merkel is going to be out of office by the turn of the year at the latest, and then you've got Christine Lagarde, who's kind of coming out and actually been pretty negative. I heard the speech and I didn't think it was particularly positive. There was some signs and signals of growth, but it's very minor. The growth isn't particularly elevated, and I think that puts the euro under pressure. So I would be looking at selling the euro, but I just don't particularly like the area. We draw some of these levels in, and we are at a bit of a buy zone here. I want to get it back to this sell zone, and if it comes back to the sell zone, then I think that we can start thinking about the euro. I mean, there is a falling wedge there, which tends to be quite positive. But
I've got it as a buy at the moment, and
yeah,
it's an extremely resilient currency.
Yes, it is. Yeah,
it just hangs in there and hangs in there, and you think, oh, it cannot possibly rally here, and suddenly there it goes.
Yeah, I agree, mate. I mean, I would want it to rally here, to sell it at a decent price. I wouldn't really want to sell it just here, but I don't think the fundamentals are particularly good for the euro. We're battling with other things as well. We've got the COT data and the seasonality, which would actually suggest a bit of potentially a little bit of downside with the dollar. So maybe taking it against the dollar might not be the best thing, but Jira, you're bullish on the euro. I think that's okay at this stage. But then you're bullish on the euro against the yen, particularly, aren't you? And that still looks pretty good. I don't know where.
And Jira, to answer your previous question, sorry, I didn't get it to it. Yes, I always use the daily chart for my average true range, always, no matter what I'm looking at.
Yeah. Now, if you look at the euro against some of these other ones, so euro versus the Aussie, yes, it looks like it's at a low. The issue is, what's going to drive it higher? And I've heard nothing which would
Those two
suggest to
bull
me.
bars.
Yeah, this one here and this one here.
Yeah.
Yeah. Yeah, I mean, there's certainly buying that went on here, but I think I'm trying to think about the longer term picture really with the euro. And again, I think the euro, if you're going to try and sell this against the Aussie, then I'd want it near the trend line. I wouldn't want to sell it here by any stretch. So a bit of positive price action would actually be of benefit, because somewhere in this area, I think the euro is a sell. Right along the trend line, rather than down here. I wouldn't want to sell anything in a buy zone. Euro Aussie minus five.
I placed two orders on this last week, and I'm still waiting. That third last bar, which was Thursday's bar, right? See, that's a potential higher low for me, and that's an entry there.
Yeah.
But it didn't trigger, so I closed the order, of course. And
Yeah.
this morning it's gone through that high. So today it'll be very, very interesting, and will tell me a lot about this. I think that candle today.
Yeah.
If that remains a higher low, then I'll probably trade that tomorrow.
Yeah. Okay.
In fact, I may trade it today if it sets up on a smaller time frame.
Yeah, it makes sense, mate.
Another reason I'm bullish is I've got a massive channel on the monthly chart.
Okay, I'll have a look.
Oh, sorry, you're on the euro dollar, aren't you?
Euro Aussie.
Euro Aussie, yeah. On the monthly chart, if you go, there's a massive rising channel or ascending channel.
Is it a bit further back? Is it?
Yep.
What is it? What date does it start?
Starts on I can't even go back that far now. Hang on, I'll go back. Starts on monthly chart. It is August 2012.
August 2012. This one here. Oh, 2012. Sorry. I haven't gone back. I haven't got data going back that far. I know you can change the settings on this, but I can never remember how you do it.
Well, that low, your lowest low there.
Yeah.
If you join that to the low of the candle that's forming at the moment on the monthly chart. Yeah, just about there.
Yeah.
And you've got probably three. I've got 1, 2, 3, 4 touches on the high side. Maybe I should just show my chart.
Yeah.
Because you haven't got the same data. Hang on, I'll show you.
Yeah. Let's have a look.
Just very briefly. Got it?
Got it. Yeah, got it, mate. Okay.
Okay, so it's right on the bottom of that channel. And there's a decent old horizontal level in there as well.
Yeah.
So, at the very least, I'm expecting a bounce, maybe to your trend line,
Yeah.
That may well be the case. But, if this was to actually, and if the Aussie was to crash, and I don't know why that would be the case. And as I've said all along, from a fundamental point of view, it's very, very difficult to be trading the euro versus long versus the Aussie at the moment.
Yes, it is.
Doesn't make a lot of sense.
Yeah.
But the chart does.
Yeah, it absolutely does, mate. And this is where, you start to recognize that, either there are fundamental drivers that we're just not quite a party to, which is possible, or the price action is, or that's priced in. All the fundamentals are priced in. That's always a possibility as well. The current fundamental situation, which it could be, because actually, I have seen Australian numbers just ease off a little bit. And I suppose we are kind of in that phase of, is there another turning point where the Aussie starts to spike higher than the euro fundamentally? Or could things start to turn around here? Are we going to get some sort of basing out? But yeah, it does look good, mate. You're absolutely right, and that horizontal level looks good as well, doesn't it? on the Euro Aussie. So
yeah, at the very least, I'm
yeah,
seeing it as a bounce point.
yeah, yeah.
So, I am keen to trade that, but the weekend got in the way, and would have triggered in this morning, but I haven't traded it this morning yet. So, but tomorrow I'll have a look at that, and if that's intact as a low, I would look to trade that long. I may even, as I said, certainly there's nothing there to show me that there's a market here yet today. But if we were to break little ascending triangle there that you can see, that's pretty clear on a smaller time frame. If that were to break to the short side, then we got back above here, in particular back above the weekly pivot, and retested that. I better make that a bit clearer for those who can't see it. So there's an ascending triangle here, right? Nice little support level as well. If we were to break through here, maybe even take this, match this low, get back above the pivots, then retest that area. That's the place that I would go long.
Mm.
I don't, and that could happen on a smaller time frame as well.
Mm.
You can see that nice little retracement going on there, suggesting that there might be some more downside. And that bar there looks like a seller bar as well. But more of a scalp than anything. This area here is the one that interests me, really. We'll see what happens.
Yeah, I can see that. Yeah, and it is. Do you know, Matt? I wonder whether we're just going to get a bit of a sleepy few days with the markets because of
Fed week. Yeah.
Yeah, because it's Fed week exactly, and that's not until Wednesday, is it? So where are we at?
Yeah, we might be able to exercise the breakout trade.
Yes. Here we go. Yeah. So breakout trade for the Fed, you mean?
Yes.
Yeah. Well, let's have a quick look at some of these numbers. Did you want to go around the grounds now, or do you want to do that in a bit?
Do it in a bit, mate. You go.
Yep. Okay, so sleepy week. This is why it's going to be a sleepy week, in my opinion, anyway. So looking, to what we've had so far, and let's just go through all the data points that we've had. We may as well, because it's going to be a quiet day. So Rightmove HPI. So this is the house price index for the UK from a website called Rightmove. Quite new to the market when it comes down to gauging HPI, but they are probably one of the most popular and regularly used instruments to try and buy houses these days. It used to be that Nationwide and Halifax would have been mortgage providers that would have provided this HPI, but now we got Rightmove kind of stepping in there as well, and we can see some inflation there. Previous was 0.5% in house price index. So the house price index is popping to the upside here, and we did see a little bit of a dip towards the end of last year, and now we're starting to pick back up again. When it comes down to whether this is seasonal, well, there is usually a bit of a seasonal aspect during the springtime in the UK anyway. And you can see that it's not as big a jump as it has been back here. But the most important aspect is that there is a bit of inflation coming there with the house price index. Industrial production year on year, previous is 7.3%. Actual 35.1%. Now, obviously, this is coming from a lower band, but that is a massive jump. And I suspect that China's road to recovery is well and truly on its way. Again, China will not want these bond yields going too high when it comes down to the currency, and this is where we're starting to see some of these potentially some of these effects of what's going on, where we are certainly in bullish spirits right now with the market. The bond yield starting to push higher is causing a negative effect with currencies. I've been hearing this morning that Turkey and Brazil are now potentially having to hike interest rates because they are in this situation where they're having to fight with currency effect. Now they won't want to do that. You know, no country wants to be hiking interest rates right now because they're still trying to get through the pandemic. But this is where the hand may well be forced in the end, and we might be looking at a situation where people have to do what is being set out in front of them. So looking at these numbers is really important, but we see industrial production, decent jump there. Retail sales, a massive jump again, 33.8%. So we're seeing the consumer is looking in pretty good shape. Looks like the businesses, certainly in this sector, are in pretty good shape. Now let's have a look. Fixed asset investment. So what are people buying? Previous at 2.9.
Taking TP1 on cable, mate.
Beautifully done, mate. Beautifully done. We'll come back and have a look at that in a moment. So the fixed asset investment, you know, are companies buying goods and bits and pieces like that? I presume that's what that is. So the capital investment, yeah, factories and roads and stuff like that. So are companies buying stuff like that? Forecast was at 40%, but there's still a big bounce. You know, you look at the previous 2.9%. So this is suggesting that companies are investing in new equipment. Unemployment rate, pretty in a good range, 5.5%. Now let's have a look at what the unemployment rate has been in the past. Okay, we don't have data that goes back that far, so we're looking at around about the 5.1, 5%, 5%. So in a range, you know, it's okay. It doesn't look too bad. You know, when we're looking back at the pandemic, it was 6.2s, around about the 6% mark. Maybe we're halfway back there again, but it's okay. Now we look at the Japan tertiary industrial activity is still quite negative. Japan's not really lifting itself that well. German WPI, which really accounts for the wholesalers. So this is just another aspect of the supply chain, and we are starting to see that the price of goods is higher than forecast. Now I'm interested in why that's higher than forecast and lower than previous. Now, does that show inflation or because it's seasonally adjusted? It looks like it is. You know, if we try to consider March every year and what's happened in March every year, then that was last March, and we kind of go back. That was the March previously, and this number's pretty high, and both of these two numbers have been pretty high. So, okay, it's coming down a little bit. Does that mean the trend is changing, or are we looking at it sort of more holistically and saying, well, these are both quite lofty. We haven't really seen prices like this for, you know, really right back until when we saw the financial crash, really. You know, we were a big dip down here, but then it started to pick up. So I think that could be quite telling. So the message really coming from here is that things are on the move, and will monetary policy have to change, you know, and have to adapt itself from what it really wanted to do. Oh, yeah, we'll have a look at oil as well in a moment. So manufacturing sales. So we've got other numbers coming from Canada. Tomorrow, we do have some big numbers from the United States, core retail sales and retail sales. So we want to have a look at the consumer. But the reason I think it's going to be a relatively quiet week is because the FOMC statement and the funds rate and everything else on Wednesday. And this tends to skew some of the price action going into that, you know, as people try and position themselves. And it's not whether they're going to change the interest rate, it's whether their statements suggest that they're going to be changing their interest rate nearer down the road than you know, the likes of the euro and the yen, you know, the eurozone and Japan and everybody else. Because what Alexis was talking about the other day was the carry trade. And there's no carry. There's pretty much no carry because everybody's at low interest rate. So you're not getting anything for switching your money really right now. So who's going to move first? And everybody's looking into that. Now let's have a look at oil. So a quick look at oil. Silver pop into the upside. So anybody that managed to get that trade, well done. Gold is just edging higher. Well, I say well done. Okay, we're not on the way home yet, but it looks like the setup was right. Now let's have a look at oil. And we'll look at this on a longer term time frame. Now, the price action with oil is suggesting sell zone. So I wouldn't want to be building into positions here. And we've really tested nothing. This is an incredible move really to the upside. maybe not equaling the incredible move to the downside that we saw in this particular period here, but that is an incredible move to the upside. And as I say, it's not come back at all in the last 5 months. So you would really you'd have to assume that it would at some point come back and test something. So that's the first thing to note, and it could come back along this trend line and really maybe hit a horizontal level. These are the kind of areas that I'd want to be getting involved to the upside with oil. I wouldn't want to short it though. I think the short with oil looks to me to be so dangerous. I mean, there's obvious kind of bullish activity. Let's think of the fundamentals. What we've had so far is OPEC agreeing to keep the supply at a minimum. We've got a world economy which is starting to kind of pick up again. So the back to the use of oil and things like that. Energy is going to be kind of back on the cards again if we're starting to move. And then you've got the only other thing that you could really start going on at this particular stage are the crude oil inventories. And if we look back, let's just have a look at the chart because it's going to be easier. In inventories, okay, quite a big pop to the upside in March, but again a big drop. So maybe wait again until Wednesday, before you're really making any kind of statement and an assumption on oil. But it doesn't look again like this is going to move until the FOMC statement. So right now, I think oil is just in sleepy town. And if you want to take short-term trades, then really the only way you can take this is to the upside, because that's the overall trend and unlikely to break down. But if you want to take something longer term, I think you're probably waiting for 52. It might be slightly higher than it might be significantly higher than 52 in the end. But that's where I'd want to wait for at this stage before I got involved in the upside with oil, and I wouldn't want to sell it. It's in that sell zone. But I wouldn't want to sell it. You got a horizontal level here as well. Maybe you're going to have to use the tips here. Don't know. But could even be as high as that, 74, before we start to see any real downside. So it's really how you go long, really, to my mind, rather than going short. Maybe 63.50 as a potential long. Let's also talk about Bitcoin. Bitcoin, reached this all-time high, and it's just retracing a little bit off that all-time high. But it seems just untamable at this stage. Not my game at all. I'm still waiting for 40,000 before I'm getting anything involved with Bitcoin, but. It is just an absolute tear, isn't it, mate? Somebody at the high is going to be left holding the baby. You would suspect, and I wouldn't be surprised if we're close to that.
No idea.
Yeah, I can see you throwing up your hand. What's going on? I see the same with Ethereum. I see the same with Cardano as well. I think Cardano is probably due some sort of retracement. Yes, we want to get involved in this stuff, but I'm certainly not having any kind of FOMO when it comes down to the likes of Bitcoin or any of those guys.
No, nor me. I'm okay.
Back. Yeah, so we're leaving that.
I've seen a few, not to this extent, I've got to say, but I've seen a few skyrocket in my day, and I don't. It'd been nice, would have been good, but
yeah,
it's not the end of the world,
No, it's not. Roy, it's Roy saying about ADA having lots of bullish events this month, and it's difficult, isn't it, with ADA, because it's had such a like Bitcoin actually, with all these, they've had such a huge run to the upside, and it appeared to be pushing because of the fundamentals of what's going on with Cardano. So you would think it's probably going to go higher. I think the interesting level on Cardano is 70 cents. I think that if it comes back to 70 cents, then I think we're going to see the buyers come back into play. Whether it comes back there is anybody's guess. But it does seem to be in a bit of sleepy town right now. Things are a little bit quiet when it comes down to some of the other cryptos. But Bitcoin, just no. And the thing with Bitcoin, the thing that concerns me the most with Bitcoin is that I think the reason that it's going higher is because people that don't know what they're doing are buying it, and it tends to result in burnt fingers. You know, my brother was telling me that his friend rung him the other day and was saying, my wife wants to get into Bitcoin. How does she buy shares in Bitcoin? And he was like, okay, you don't really buy shares in Bitcoin. This is a bit concerning. So yeah, so I don't know. I mean, you would think they're all coming down. The question is how you play it, doesn't it? If you've bought Bitcoin at 3,000, you've got two options. You hold on to your 3,000 because you're never going to get a better price than that, probably. Or you take your profit on your 3,000.
If it went back there, you wouldn't want to be buying, I don't think.
No, I agree, mate. I agree. But you could look at this really pragmatically, couldn't you? You could say, right, I'm in at 3,000. If it comes back to 3,000, I've lost nothing. Apart from all those gains, I've given up those gains, but I've lost nothing. So you could be pragmatic like that, or you could go, I've got in at 3,000. I'm gonna close my position here, and when it comes back, I'm gonna buy it again. Difficult mindset, but you could do that. Or you could go, I've got in at 3,000. I'm closing it. I'm never looking at the thing again. I don't know. So it's one of those, isn't it? If you've got a really low price with this, because you're never going to be able to pick the high. This could go another 40,000 without coming back, and anybody that kind of closes their position is just going to be spitting feathers. But anybody that is holding from 3,000 and they see it come back will be thinking, I could have taken that profit and then put it back on, when it came back again. So, how, as I say, how you choose to interact with the market probably needs to be standard across the board. But when you see moves like we've had in Bitcoin, they're so unprecedented, really, that it's very difficult to then go, I'm going to build my strategy and this is the way I'm going to play it.
Yeah, look, the only way I know to make money long term in trading financials in any way, shape, or form is to have a method, proven method that works, and stick to it.
Yeah.
And if you haven't got that, the rest is, go to the casino.
Yeah. Yeah. Do you know, it's really interesting, mate, because I've been on trading sort of education courses, and they've asked me where I'm buying, and I've told them where I'm buying, and because there's this thing about closing the position, that's where you make your profit. That's how you define what kind of trader you are. Where do you get out? And when that question's come up, there are certain things that in the back of my head, my answer is, well, I never get out. But it's kind of frowned upon in many respects, But the reason that I have that approach is that if you've got Bitcoin at 3,000, and you are able to get yield on it, why would you need to get out? Why?
Yield, yes. Absolutely.
Yeah, it sort of doesn't really make any sense. If you're buying stuff for the longer term, obviously that longer term eventually ends. There's no point in holding on to British Airways when it pops up in the 80s and then comes all the way back down to zero pretty much in the 90s, or during that particular period. I completely concur with that. But while things are still moving higher, you're kind of earning. You're sort of like you're earning sort of like the yield, and in some respects, even if you got out exactly where you got in, as long as you got enough yield over the course of a 5-year period to have given you something back, then again, I don't know why you'd need a strategy to get out immediately. And that's really what I'm talking about. When that immediate question comes up, where are you getting out? I'm like, well, I don't really see myself getting out at this stage. Really, I'll get out when it looks to me like the parameters have changed. Because really what I want to get is kickback. That's what I'm investing for. And obviously it's a different strategy. I'm talking about investment rather than trading. Trading is a completely different thing, because you don't get yield with trading unless you get swaps. And you and I have tried to work out the maths of when they pay you swaps and when they don't. It's so difficult, isn't it? But I reckon
fortunately, at the moment, I'm getting positive swaps on.
Oh, lovely job. Yeah, yeah. But you don't know why, right?
No, I don't. Don't absolutely everything that I have been in long-ish term since 2020 seems to have negative swaps.
Yeah.
And this goes back to the carry trade and the question from Roy, I think. Yeah, same sort of principle. If you are, you should be, if you're trading a currency against another currency whose interest rate is lower or higher, depending on which way you look at it, you should be getting paid a positive swap for that versus a negative swap for that,
Yes.
depending on
Yes.
which way it goes, right? It doesn't seem to work like that anymore.
Yeah.
It seems to be broker's privilege or broker's choice as to whether you get swaps or not.
Yeah. It
Uh,
does. It
it's
does.
crazy.
Jara just saying that you can buy shares in blockchain companies, and I think that's a really interesting way to play this whole story, Jara. I'm with you on that. I really like that particular play, and I'm looking at a blockchain company called Argo, but I can't get in because it's I can't justify getting in. I should say. Of course, I get in. I can trigger it whenever I like, but I can't justify getting in because the price is just too high. But I agree with you. That's the way that I'd really like to um, um, interact with what's going on with Bitcoin more than anything else. Too early, I was expecting this run to happen. The stock flow indicator says Bitcoin at 100,000. Yeah, I mean you laugh after it, but why not? Why not? Why not 100,000? Hanan, I think you get out when you don't know what will happen next. Do you know, mate? And be careful with that. Nobody knows what's going to happen next. Or maybe they do. Maybe the people pushing the price up. With billions of dollars. But generally speaking, I
Few
don't
of
know what's
those are
going to
in
happen
jail
next.
as well.
Yeah, exactly. For example, I don't think many people hold on to their Bitcoin just because of fear. I don't think people, or you mean you do? You think people hold on fear? Short in gold used to have, okay, yeah, positive swap, and now it's negative. Riot and Mara went up more than Bitcoin. Yeah, and they're just mining. Yeah, yeah. Do you know, mate? I'm Roy. I'm totally. Yeah, I'm with that. This is the thing. Argo blockchain is the one I'm looking at because it's listed on the LSE, so I can trade it without any issues with currency. And I wish I could trade US stocks with a bit more a bit more comfortably because there's so much more you can do with with US stocks. There's so many more ways to make money than just out and out trading them. But Argo blockchain is another one, right? Now Argo blockchain this year, and I'm just going to have a quick look at how high they are.
Common sense tells me blockchain is the way to go.
Yeah, I'm with you on that, mate. I'm with
Well,
you
it's the
on that.
technology, isn't it? Isn't that the technology on which Bitcoin is based?
Yeah. So what these companies are doing is mining Bitcoin. So now Argo blockchain are really interesting. So they are up currently by 836%. Now Bitcoin year to date. So remember that number. So 830% higher. Bitcoin year to date is up by, where are we at? Here we go. Bitcoin is up by 130%. So yeah, these mining companies are really, in my opinion, the same as you guys. That's where I'd like to interact with it if I can, but it's got to come back quite significantly before I get in. Now, well, yeah, sorry, mate. So Argo blockchain, for example, are mining Bitcoin, and they are making currently 100 Bitcoin, 120, I think the last read was, in a month. Now, if we are talking about Bitcoin being at 100,000, then you're talking about 120 million. Is that right? Yes, that is right, isn't it?
What are they doing? 100 and...
They're doing, or is it 12 million? They're doing 120 Bitcoin a month.
Yep.
And if Bitcoin went to 100,000,
Oh, yeah, that'd be 12 million.
12 million a month. I mean, what sort of numbers are they? That is crazy. If they manage to mine that
I don't
stuff,
know how much does it cost them to do it.
well, then that's a good
Doesn't
point.
mean anything until I know the cost.
Oh yeah, no, that's very good. Would you not piss on my firework? Yeah.
Sorry,
So
mate. Gee, that's a big number.
yeah. Let's can we leave logic out of it just for a little while?
Okay.
What is this costing them? Okay, their balance sheet. No, I did read about this. But it's nowhere near that. I mean, I can tell you that for sure. They're just building a massive thing in Texas where they've got, they've had to buy the land, but this is the thing. A lot of the stuff they're buying are genuine assets. So even if they do purchase land and purchase buildings, aside from the computers and stuff, which will obviously eventually go out of date, a lot of the stuff is actually resellable assets that they're
McDonald's.
Yeah, exactly. Talking McDonald's, exactly that, mate. Yeah, I did have the numbers on this, which I'll have to see if I can somehow dig out again. But yeah, I mean it's a fair point, but I guarantee it's probably not costing them 120 million a month to run it. I mean, you times that by 12 to get what their potentially getting in, at the end of every year. Now that 120 Bitcoin aren't guaranteed every month, of course, because they might not win the coins during that particular period, for want of a better term. But it's still mad impressive. Right, sorry, I am babbling on, and I'm aware that we've probably got another show about to start.
Oh, that's right. Gee whiz, keep forgetting that.
Sorry about that, Angel. I keep forgetting. But anyway, mate, we're probably going to be looking at relatively quiet price action for a little while. Oh, look at that silver trade go, guys. I don't know if you guys managed to get into that, but that's looking pretty good right now. We're in that area, 14s. I mean, you're already near your 2-to-1.
Nice.
Even if you manage to get in there, you've got a better than a 1-to-1 trade going on. So hopefully some of you guys got into that silver trade as well. That'd be good.
Nice job, buddy.
Decent start to the week. Okie doke. So yeah, we'll leave it there, mate, and do it again tomorrow.
Well, very, very quickly, I'll just very, very quickly, so Angel can kick us out of here.
Oh, well done, Hannon. Awesome stuff.
Euro dollar. I'm long above here, right? I'll give you that level if you want. This is on the daily chart. 198.88. Sorry, 1.1988 is euro dollar long, right? 1.1988. Stop loss is just under the candle at 1.1909. Let's call it 1.1908 actually. And TP1 is at 1.2020. Okay, I'll update that for you tomorrow. Pound Aussie, I'm still looking for a long here. Can't find a setup at the moment. Euro Aussie, as I said, I will trade that bar if this remains a higher low tomorrow, and still looking for a leg up. And I think that's it. Pound is just on TP1. We went through TP1. Let's see if we can get to TP2. That is all from me.
Fantastic stuff. Okay, guys, have a great afternoon. Stay safe in the market. I'm just seeing silver right on top of that neckline. So, in fact, it's not quite there yet. It's 26.35 maybe. Looks like about that. Okay, have a great one, guys. We'll see you in the morning. Have a good afternoon, Jeff, or good evening, mate, and I'll see you tomorrow.
Right, buddy.